Welcome to the DeFi Standard. This is Patty XRP, and we got
Mickey B. Fresh.
nice, love it. Been about a week since we did the last live stream. Just so like everybody knows, there hasn't been a ton of information coming out on Flare or Songbird in the past week, and I mean, I think we're just in a lull period. It's kind of so there's not a ton to talk about, but we did get some new stuff, right, Mickey?
Yes, we did.
Yeah. So
So regarding, let's start off with everyone as a pilot. Everyone's aware of the hack that went down with Poly Network, right? So $600 million was stolen. This was an interoperability protocol now between multiple different networks here. And I'm just going to go into basically why this would not be possible with the F asset system now, specifically. And this is the reason why Flare Networks designed it in a way so that the assets are specifically not locked. I mean, there really is no way to lock them on their native chains in a trustless manner. Like wrapped Bitcoin is held by a multi-sig wallet on the Bitcoin network. Now, if anything hacks into that wallet, all that Bitcoin could totally disappear. Now, the F asset system is designed in a way so that it's not just locked in an actual smart contract in some interoperability between networks. It's actually a claim, and the collateral for that claim is on the native network using the native tokens of Flare. So no matter whatever happens to get your, say, XRP back when you redeem, which is connected through the state connector system. I know this is kind of a little technical here, but it's very important to understand so you understand what the risk factors are and why those risks don't apply to, say, the F asset system and bringing your XRP over to Flare. Like a hack like this with the Poly network could never technically happen because of the design. All right. So that collateral is always there on the Flare network at 2.5 times its value, and it's managed in real time by decentralized oracles. And you could read the data from the other blockchains. So I just wanted to just really make everyone understand here, in case there's a risk factor, it really doesn't apply to the F asset system here. So Patty, you want to add anything to that before we jump into like decentralized insurance, which is
yeah.
still, I think going to be a big part of this industry.
Oh, absolutely. And it's very nascent as well. But I did want to pull up, kind of just do a little brief like drawing. I want to see if I can get this bigger for you guys. Let's see. Oh, there we go. Zoom in. That's what we want. Cool. So basically, you can imagine, like, let's say we have Flare Network over here and Ethereum is over here. So one of the things, the way that relay bridge was working, where, like Mickey said, they were locking assets up in smart contracts, and they had multi-sig signers on it. And from what I could tell, there weren't very many. So like the holding of those assets and who controls them, it allows them to move to different chains, wasn't like the most permissionless thing in the world. So that was another issue. But I will say that Flare Finance, this is something they could be open to this as an attack vector. And the way that Flare Wrap is going to work, so if you have Flare over here and then Ethereum over here, and let's say you want to bring some wrapped Ethereum onto the network, basically what will happen is your Ethereum will get locked in a smart contract over here, and then a signal will be sent across this relay bridge to the nodes on the Flare network, and then it will mint you like that wrapped ETH, or I guess it'll be called YETH on Flare Finance. And so if you wanted to come back, all you do is you kind of send the assets back to Flare Wrap. They'll burn that like wrapped Ethereum, and then it will signal back across to the Ethereum network to unlock those tokens there and send it to the address that you specified. So what was going on with like that Poly network hack was somebody realized that they could send messages from over here to this like locked smart contract and basically override the multi-sig that was there due to some like smart contract coding errors and cryptography errors that they had. So unfortunately, in this instance, it was really big. At least like, I guess a third or half of it has been returned. But that's another thing. Like there's no guarantee on you getting your assets back. Just because Poly Network was asking the hacker to do it doesn't mean they would. Now, I will say, like, when you steal $600 million, it's not necessarily the easiest thing to hide in the world and get to yourself. So, like, let's say the hacker did keep all that money, it would, take a very long time for them to kind of distribute and launder that back so they can use it in the real world. But just kind of wanted to point that out, how that was working with like a little roughly or crude diagram. But I think that should cover it for the Poly network. Like Mickey said, it's pretty great that the F asset system doesn't have this, like, these assets locked in smart contracts that allows you to still use the underlying assets on the native network, which is like via the agents. So, and then also, like, if something does happen, you have that smart collateral that will automatically pay you out for any lost value. But yeah, Mickey, with that, I think we can move over
Yeah. Now,
into
Flare, I just do want to throw in somebody
cool.
had a
Yeah.
question there. I just glanced in the chat here about the USDT. So they do bring over that wrapped stable coin of a couple different. It's USDC, USDT, and I think DAI, and then wrap that to be CUSD. So that's just one other component there.
Cool.
But there's really no question to it. All right, but decentralized insurance. So I think this is a huge topic, and I think it's gonna play a huge role in the future. Insurance in general, we have insurance on our cars, we have homeowners insurance on houses. So it's something that's going to come to also the financial system, especially with DeFi, since there's really like no regulations over this, and it's going to still be very difficult to regulate actual software itself. Decentralized insurance kind of fits, into this category. Now, what are some of the decentralized insurance protocols that are out there, and how do they work? Flare Finance is going to offer FlareMutual. They said it's going to be based around how Nexus Mutual works, vaguely. They didn't give details yet. They didn't say much in the white paper around this, but they did answer Patty's tweet on Twitter and asked if you could actually take out your own decentralized finance policy, and they said yes. So now there's different things that could be covered in decentralized insurance. Anything from, say, the code's smart contract bugs. So say there was a liquidity pool, and liquidity pool, say, had a bug in it, and the assets were lost. Insurance could cover that. Also, we could see safe funds like Kava. Their governance they issued a bunch of Kava and now are keeping it in the safe fund in case, God forbid, anything happens and users lost their assets, they would get paid out. Now, that's in Kava. I don't see that ever happening on Flare Network itself, but on Flare Finance, that is a possibility. But with this insurance protocol, basically, it's going to allow people to put their assets into FlareMutual, and you'll be able to earn yield, and you'll be covering those policies. Now, Pat, do you want to get into a little more of the details of how that works?
Yeah, so I got this pulled up on. So here's the white paper for Nexus Mutual, and this is like what it'll be most closely modeled after, based on what Crypto Frenchie said. So they kind of show you in the current insurance model, you basically have your insurance entity. So you can think of somebody like State Farm does, that's a big one that does a lot of different types of insurance. And they handle the underwriting, capital provisioning, their product development, governance, investment management, claims assessment, and pricing expertise all in one house. What Nexus Mutual is going to be doing initially, to kind of decentralize this, is they'll have groups of people contributing to the capital provisioning. People that hold their native asset, which is the NXM token, will be able to participate in governance. Then you'll have claims assessors and risk assessors. So individuals can participate as these like risk assessors or claims assessors and be paid to do that. However, like, you're required to put up stake in the native asset of the protocol in order to do this, which is kind of used as a way to deter bad actors that are going to put like do faulty assessments, and things like that, trying to game the system. So you have to put up value up front to be one of these people doing that. They also have like an overarching, I guess, like a a board of directors kind of that will handle things, that are basically voted on by governance, and they will handle weird situations or maybe things that have to happen, off the blockchain for some reason. But basically, what you can do is you can come here, you can purchase insurance from Nexus Mutual for normally a short period of time right now as it's just starting out. So on FlareMutual, when that launches, I imagine they won't have like super long term insurance policies, but they're ones like when they end, you can come back and get another one and re up like that. So, like, the first thing I would expect FlareMutual to cover, since that's what Nexus Mutual did, is what they call smart contract cover. So, that's something where, let's say, a bug in a smart contract code that had nothing to do with the end user caused them to suffer a financial loss. Well, they can come, they can show the facts of what happened, and these claims assessors will ultimately vote on if the claim should be advanced. And they have like a process. There's multiple voting things. There's one where all the people that have NXM tokens, like as a secondary layer, can vote if there's not what would you call it, consensus among these claims assessors on if they should be paid out for an accident that happened, basically. So it works similarly to how like a centralized insurance firm works, but they're distributing different parts of it. And a lot of the pricing and investment management is done algorithmically, which determines what the price of the NXM token is. So let's kind of touch on, yeah, this is a good one right here. I know it's kind of small on this white paper, but there we go. So they have this thing called MCR percentage, which is ratio of capital pool funds to the minimum capital requirement. So this is like the minimum capital that needs to be in the system for it to be solvent and handle the amount of basically claims they would think comes in, which is based on this 99.5% solvency level, which is like something that's mandated in, I think, like the UK, Japan, Australia, a few other big companies, which means your basically the capital backing all your insurance or insurance coverage needs to be able to handle 99.5% of cases. So that means that one case, or yeah, I think one case out of 200 basically would be outside of this. So it's kind of limiting the risk there. And that's something they use like in traditional insurance products to, make sure they're solvent. But back to the token model. So it says the token price rises when the mutual has adequate funds. So there is an algorithm behind the NXM token. So as more funds get put into the capital pool to kind of back this whole ecosystem, the price is going to rise. So as the price is rising, like if it gets up here, less people are going to want to be buying in to help with the whole insurance process. And you may have people that bought in down here when the cost was lower that has seen their NXM token go up, so they could return it to the system for whatever the specified payout is at that time. And then conversely, if like maybe the capital pool is barely above this MCR level, then people will start buying it up because they know how this curves work. Also, very interesting, Mickey, is you have to be KYC'd to be in this, and you'll actually be part of an incorporated entity that Nexus Mutual has formed in the UK to participate in this whole thing. So we'll see if FlareMutual goes that route or not. I'm not sure, but yeah, I think that covers a lot, Mickey. I don't know if you have anything else to add, but
well, I just want to add that there's different use cases for for decentralized insurance here.
Yeah.
So you basically could have crypto wallet insurance. You could have collateral protection for crypto-backed loans. So that's kind of like your robo-advisor. Now, I don't know if that's going to come out of necessarily FlareMutual over there, but those are things that we could see in the insurance industry. Then there's smart contract coverage, which you were talking about, cryptocurrency insurance, like with new projects coming, and then mutuals to replace insurance eventually. Like as the insurance industry goes with DeFi, it's not going to be just DeFi. The insurance industry in general is going to start move on the blockchain. We're already seeing things like IBM, and I forgot, was it AG, or one of the big insurance companies has been doing on like the Hyperledger blockchains, starting to move insurance claims there. Because the whole process, if you think of insurance in general, the process, it's very cumbersome. There's a lot of intermediaries. And when things are easily transparent, I mean, blockchain is just like an ideal thing for insurance. Ripple has even talked about, insurance as another vertical to provide in the future. And you think of what they're doing with ODL and everything. I mean, insurance fits into their model. So I think we're going to really start to see insurance come along. And one thing I did notice this was really interesting was that if you look at the growth of DeFi insurance, it's kind of the best indicator to see the growth of DeFi in general more than the total value locked, because it means more users are coming into onto these platforms and these protocols and dApps and using them. Therefore, they're taking out more insurance policies. So that's a really great indicator. And that is just going up, 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 and up. So, I mean, there's really no stopping the whole DeFi train here. Gary Gensler is not going to stop it. U.S. government's really not going to stop it. KYC and travel rule are coming. The hammer is coming down with that. I mean, I just really want to give everyone a warning. I know we talk about regulations a lot, but the regulation really should be focusing on, besides that infrastructure bill, which is 2 years away, and who knows what's going to happen with it, KYC and AML come. So that's just something like we got to really just acknowledge and just talk about and not ignore it like it's not going to happen. Like in the Zum app, you're going to have KYC AML. And with that, you'll even be able to get better insurance policies because now you have your actual identity, like Patty was saying there, with things like that. Now we're going to have to probably KYC AML to get into the Flare Finance interface. And that's where they're going to regulate, is the interface where you endpoints. So that's the endpoint to get in. Now, your KYC, your identity is not going to be attached to every transaction that you necessarily do there. Not everyone's going to see it. But by having that, then that would apply to something like Nexus Mutual, right, Patty? Where they're KYCing, to get that token. If you're already KYCing to get into Flare Finance, that's why they could kind of do a protocol like Nexus Mutual, I think, right?
Yes. So also, I just wanted to add on top of that, Mickey. Like one of the big parts with insurance is being able to earn interest on, the payments people are making for their coverage, in the hopes that whatever you end up having to pay out is less than what you took in plus interest from different like products. So we know DeFi is a great place to earn interest and higher yields than you would in traditional markets. So like in a lot of insurance companies, what they get into is like government bonds and things like that, which really aren't yielding that much currently. So in the white paper also, they kind of mention, since Nexus Mutual was launching on Ethereum, what were some of the stuff that they could do to generate returns. And they were using Ethereum as like the asset that they were converting the NXM token against. So I don't know if they'll use a stable coin or maybe Spark or YFlare or something like that with FlareMutual. We'll kind of have to see. But in this instance, they were saying basically you could lock up ETH to generate interest in the proposed proof of stake system, which still isn't even here when they wrote this a while back. Investing in financial instruments based on collateralized lending, acting as a guarantor in state channel and payment channel networks. So those are some interesting things. But then I think about with the Flare network, well, they could have Spark be this asset that ETH represents in Nexus Mutual and then Spark for FlareMutual potentially. You can have those, detachable votes to go to the FTSO to earn yield with Spark. Additionally, you can use Spark to, mint YUSD from the FlareLoans system and then utilize that to get interest. Maybe you put that YUSD into a stability pool to get payouts and things like that. So there's definitely a lot of different ways that yield can be earned for these people that are pooling their assets together within FlareMutual. So that was the other part I kind of wanted to add. But I don't.
Yeah, and then the question is there going to be an additional token added with this? And as Flare community just said here in the chat, we're waiting for an additional white paper. I think it's called the technical paper that's going to come out from Flare Finance now regarding that. So, Nexus Mutual has its own token. We're going to see another token here. I mean, originally Flare Finance had 3 tokens, and they went to 2. And it just seems like that is kind of a necessity for a whole insurance protocol like that. And we have to keep in mind, Flare Finance is 6 different protocols here. So it's not just one dApp. It's 6 within one. So it's like taking Aave, Compound Maker, and Uniswap and putting them all together into like one umbrella. So that's why you could have multiple tokens here to do that. I don't know if they could use Wi-Fi for this. You also
Yeah,
have the
I feel like it
APY
messes it up.
cloud, Patty, which would be really interesting how that could be utilized in this. So
Oh yeah,
we'll have to wait and see, really.
we also know if you participate in FlareMutual, you're going to be able to earn some YFIN over the
Oh
first
yeah,
2
that's
years.
right.
So
Hmm.
that's another thing to consider. It's 1,000 YFIN over 2 years with what is it? 500 coming in the first month.
Hmm. So
So
it's probably
yeah.
a low risk way, just if you wanted to just take your assets and you don't want to take a high risk and you want to do something very low risk, you could probably put them in the Flare Mutual pool, or whatever they call it. Actually, I don't know if it's going to be called a pool, but that's a way to earn just basic yields without having to risk, liquidity pools and permanent losses, collateral ratios. That's something very simple you could do, and that's something, just to keep an eye out. It's another opportunity for us.
Cool. And let's see, there was one other thing I wanted to touch on with that, but I have forgotten. I will say, if you want to look into, they have a token model on the Nexus Mutual website that kind of shows you what the mathematical equations behind the price are and how all that is derived. It's a little more in depth and uses like some statistical math and different stuff like that. But you could definitely check that out on their website. Oh yeah, so actually now I remember what I was going to say. You have to be KYC'd to have that NXM token. So like some people are able to speculatively trade it and generate liquidity with wrapped NXM, like in Uniswap or something like that. But people aren't just going to be actively trading like NXM, the token that's used in this ecosystem. And from what I can tell, the liquidity pools and stuff with the wrapped NXM haven't really had any effect on the price of NXM, since it's driven by like this, what they call a continuous token model. So I just wanted to point that out as well. It's
So it's
not
kind of
like
like a
your normal
bonding curve.
asset. Yeah, it's exactly. Yeah.
So that's possible. Yeah. So then we could see maybe a third token come on where it wouldn't be something that, is traded on all different exchanges, like say YFIN and YFlare it would be specifically based around like that NXM token and how it's designed there. So interesting. So,
Cool.
all
So
right, let's move on.
yeah, that can take me into little. So we're gonna get into FlareLoans a little bit. We know it's modeled after the Liquity Protocol, and they are an interest-free borrowing service that I don't know. I can't remember which platform they're on. I think they might be on Ethereum. But this is them right here. They have close to $2.4 billion in total value locked on the ecosystem. They have low collateralization ratios and things like that. But, I don't know what exactly the numbers are going to be, and, if there's interest in things like that on FlareLoans ultimately, we'll have to see. But we can kind of start deriving what the FlareLoans protocol will look like. So on the screen here, I have like a little diagram. And basically, you'll have people that are operating as borrowers. And they put out some screenshots, Flare Finance did like a week ago, from their platform to give people like a sneak preview. Some of the things I saw was borrowing fee rather than like an interest rate or borrow rate. So a fee to me, implies it's a one-time payment. Additionally, they have a stability pool in there, and they've said they're going to use that. So that'll be the way that bad debt is paid off. But that's kind of where I've driven some of like the speculation from on how exactly it works, as well as what they've said like in their Discord and Telegram about it and modeling it after the Liquity Protocol, since that's what they said they are doing. But here, basically, you can pay a borrowing fee, which would be like, maybe it's 0.5% of whatever you're borrowing. So if you're borrowing 10K, you pay, what would it be, $500? I think is 0.5%, or sorry, $50, not 500. And you would get YUSD back for that. So the lending protocol would mint YUSD and give it to you to now use wherever you want to use it. And you also have to have collateral that you maintain throughout that process until you bring the entire like loan principal amount back to the lending protocol. At that time, you can pull your collateral out of the system. Now, if your collateral falls below the level that the system kind of specifies it needs to stay above for a certain period of time, then you can get liquidated on that. And these liquidations are given to people that are called stability providers. So people that are stability providers have either posted collateral to mint YUSD or traded maybe on FlareX into YUSD. And they can bring their stablecoin to the FlareLoans platform and put it in the stability pool, which has the responsibility of basically sending YUSD back to the system whenever a liquidation happens, because that's now bad debt. So it covers any bad debt. And by sending stable coins to the lending, like back to the FlareLoans protocol, you're able to reduce the outstanding supply and thus how much collateral needs to be in the system to keep it solvent. And so when people get liquidated, there's another one that I've seen that's being built on Polkadot where they have like a liquidation fee. So you get liquidated to the amount that you need to until your collateral's covered. Then they tack on another 20% fee that gets paid out to the people that are like paying off the bad debt as stability providers. So we'll have to see how they do that on FlareLoans exactly. But they'll be getting liquidations as well as like fees used for borrowing and redeeming your collateral. So that's a general overview how it works. It's not something that like you need to send to like the lending protocol if there's a liquidation or anything. It's all autonomous and happens on its own. And then also stability providers and borrowers will be earning YFIN. Additionally, on Songbird network, when this launches there, they're just going to be giving the DFLR tokens. If you guys remember with XFi, how we can earn DFLR in like the first 60 days, they will be the only ones receiving DFLR, will be these stability providers. So like I kind of look at this, Mickey, and I think, maybe I'm in a time where I'm not sure what the market's doing and I kind of want to de-risk my crypto portfolio. So I want to take out, um, stable coins basically. So I could go and swap into stable coins with my crypto or use my crypto as collateral to get those stable coins. I can become a stability provider and earn some, liquidation fees and other types of fees from the platform plus YFIN. And maybe I just do that for a few months. But it gives you a place to put your YUSD without having to pair it against another asset to earn yield in the meantime while you're maybe waiting to decide what you want to do with that YUSD. Or maybe you're like, okay, I need to make a big payment down the road. How much do I need to put in here for it to grow X amount over that time so I don't have to put up any more for that payment? So like that could be a place where you keep your assets.
And now you're free to use, now that YUSD is going to have multiple different use cases as the ecosystem develops. So to be in the beginning, like you're saying, it'll be the stability pool and the liquidity pools. That, probably be the ideal places to put them. Granted, you could take YUSD and swap that for the same asset that you have in as collateral and leverage up your collateral again. But with that, you're adding risk. But there is potential to use it as leverage, but that is very risky. So, it's just not financial advice. But there are different strategies that you could use. I like it because it's going to be able to allow us to really get into those liquidity pools, because it's going to really be not the only way, but the predominant way to get YFIN is really going to be to participate in the F asset liquidity pools. And that's going to be FXRP, FDoge, F Litecoin, FXLM. So, you're going to need those assets, and the most YFIN is going to come from that. If you believe YFIN is going to have a high value, and then once you earn the YFIN, that goes right in the governance staking pool, and you just collect guaranteed yield, and you're part of the governance then. So, one of my strategies was I talked about, is that if you want to be part of the founders or the beginning there, it's accumulating as much YFIN and as much Spark as you can early on, because that's where the participation is going to be the lowest and the rewards are going to be the highest. And there's going to be a lot of people who are going to say, oh, let me just wait and see how it goes. I'll wait and see how it goes. And, we're going to be able to wait and see on Songbird how it goes. So once you see it there, it's working, everything's as it says, you get familiar with the interface. Flare Finance has released some screenshots. They look really, really slick. I like their interface. We've yet to see what Bifrost looks like on the app, on the wallet app side, but that's basically just going to connect to the interface. I mean, it's like Trust Wallet or MetaMask. Once you connect to it, the interface for the DApp is where really you do everything. The wallet just kind of connects to it. So early participation, and I'm just going to keep hammering away at this, is the most important thing, and it's where you'll earn the most value and build up the most assets in the beginning. On Flare, especially. Songbird, a little. The rewards aren't as high. I wouldn't plan on minting too many S assets on that platform, but Flare is really where it's going to be at.
Yep, absolutely. I'm with you. Price, who knows what's going to happen? Maybe we'll be in another full-fledged bull run kind of market. Maybe the market cools off by the time Flare gets here, but there's going to be a lot of people that are talking about price, especially in the early days. And Mickey, when me and you started doing this, back earlier in the year, one of the big things we want to hammer home is, don't focus on price in this beginning period. It's about accumulating, a quantity of like the Spark token or YFIN or YFLR too. I mean, it's a governance token for Flare Finance, and maybe that one's less sought after. So maybe there's some, opportunities there to earn that one versus YFIN that may make more sense for you. But yeah, to me, it's all about asset accumulation, at least for like the first 3 to 6 months before I start worrying about Spark price, YFIN price, and all that. I mean, if the price is low compared to where I think it should be in a couple years, then maybe I'll buy some instead of just earning it. But that'll be something that's kind of like, I don't know how it's going to look. So price is definitely a distraction, especially when we're still this early in the game.
And the community is going to be all over staring at the Spark price as soon as it launches, and they're just be glued to the screen on Fiat Leak or whatever thing, staring at the exchanges. Well, the smart people in the community are going to be delegating their votes and taking advantage of these liquidity events and other basically incentives that they're going to do in the beginning to basically boost the ecosystem. So liquidity geysers or whatever they call them, to earn additional rewards, are going to be available. So the more Spark that you stack early on from just delegating the vote, the more YFlare you'll then earn on the airdrop for that. So those two kind of go hand in hand. So 30 days after Flare launches, you'll get the airdrop of YFlare or DFlare and SFlare. And SFlare would be based on your Songbird holdings. DFlare would be based on your Spark holdings, and then DFlare converts to YFlare within 7 days. So that's why you want to participate early, not just stacking Spark. You get other assets from that now. So it is really important. Flare has stressed this in the blogs. Crypto Eddie continues to say it. There's not too many people in the community that have really realized that Spark comes with 3 unique features of an asset, and everyone's so focused on deflationary and lower supply, and that's really not what drives the value of these assets in the future. It comes down to 3 different things. It's the utility, the yield, and the value. So Spark being used as collateral in the F asset system, this is why I think, Patty, at some point, the markets, these bear, bull things, and as there's more on-chain activity and utility and storage demand in applications and on the network of these assets, especially native crypto assets, like Spark should be separated from something like Uniswap. They're totally different. That's a DApp token, and it's in the top 15. It has no business being there, but it's there. Where the native crypto protocols will eventually be the ones that will rise to the top because their value, if their utility is there. And when I say utility, it's not just like, we say XRP with the liquidity, but utility means many different things. Delegating your FTSO vote is a form of utility into the network. And then value, as in the collateral. So as more F assets are minted, more Spark gets locked up. So you have this positive feedback loop continuously. And unlike proof of stake, you're able to do those things simultaneously. So anyone who's locking up Spark in the F asset system can still delegate to the signal providers. So now the network is offering 2 forms of basically rewards to be able to utilize the native asset. And this is why I think it puts Spark as a token, at the next generation here. And I can see DOT has similar, it is different, but I also see DOT as an asset that's going to have a very high value because of its design of being staked and then also used in the PLOs, which stand for
parachain
loan offerings.
Yeah.
Loan offerings. So full transparency, those are my two assets, XRP and Spark, and Dot are the two assets that I've been accumulating. I don't mess around with too many of the other like randoms coins out there. I don't have any XLM or anything like that, but I will like to hold some of the F assets in the future. I get that question a lot, so that's my answer on the assets that I'm accumulating.
Yeah, and I mean, I just want to add in, Mickey, like I know I get some comments like whenever we do a video about Polkadot now, it's like, oh, you guys are abandoning Flare already. I'm like,
No.
Flare is still what I mean, at least I believe Mickey sees it this way, is like some of the most rewards you could possibly ever earn from like a layer one network. Just with how much Spark they're going to deliver and what percentage that is of the total supply that they're delivering to participants is like pretty unmatched with the possibilities of how big the network could be. So that's still there. It's just we're waiting for it at this point. And maybe the Poly network hack made some people see that maybe taking a little more time and implementing the Songbird network will do a lot of good.
Yeah,
Also, Mickey,
absolutely.
something else we were talking about earlier that I think would be good to bring up is like security as a service. So we know that Flare Finance is going to be contracting one of the auditing firms to basically keep track of the network for 30 days, see if weird stuff's going on, if something needs to be fixed, and that has to do with Flare Finance after it launches. That's something as a decentralized governing body that we could vote on in the future. Like, hey, we actually want some of the fees on this network to pay for a firm to do like maybe quarterly security reports on the network, or look at behaviors and things like that. That's all stuff that's in our wheelhouse to do. That may take opportunity costs of having those funds, some of them being paid out to the users, but if it gives everybody there a safer feeling and better security for the people that are in the ecosystem for a long time, that's something we can do. But we'll kind of see how there's different things you can implement based on what is our community's like goals and values going to be, which will evolve over time, and we'll have to see how people vote. But I think it'll be interesting to see, and like once these things get going, like be creative. Maybe not everything that's a good idea is going to get passed, but we have a large group of people to try and come up with ways to improve, Flare and Flare Finance or Trustline and make them some of the best places for DeFi out there. Like the game's not over once it's built; it's just beginning.
Well said. Exactly. It's a community built network. We don't look to Hugo for everything. People shouldn't be looking to him. They're building the network. They're going to be a participant. But there's one thing here I want to address, and this has been coming up a lot. And I think it's just important for everyone just want to understand kind of how the inner workings work here with Songbird's airdrop. So a lot of exchanges, I just saw a comment, somebody said, eToro said, oh, they're not supporting. So Kraken said they're not supporting Songbird. Well, just so you understand here, every exchange they don't choose to participate in Songbird or not. They're getting Songbird tokens, regardless if they want them or don't want them, is my understanding here. Because they already supported, if they supported the snapshot and the Spark airdrop, they get them in the same wallet. The Songbird network is going to airdrop them right to the exchange. So they're going to get them. They can't refuse them. They're just going to be there. So what's going to happen is the users and all of us, if you have them on the exchange, basically going to say, hey, exchange, you're holding my Songbird hostage. You have them, just release them to me. And that's the pressure that will come. So be patient. And if they say they're not supporting it now, just be patient, because they're going to get it. And then you're basically going to say, well, give it to me. You're holding it. It's in your wallet. We can see it on Flare Scan. Like we'll be able to see it on the blockchain that it's in that exchange's wallet. So that's when you could really put the pressure. So it is possible that right at launch of Songbird, some exchanges won't, just release it to you if they say they're not. But once they realize they got it, and now the users are pressuring them and saying, hey, give us our Songbird, you're holding it. I think one by one they'll fall and they'll have to basically give in. This is why the Flare team hasn't really went out of its way to push the exchanges, because they know they're going to get it. And then when they're going to have to release Spark, so they're going to have to release Songbird. So it's kind of like, it's like not a chess game, but they're like looking ahead. So just know that, they can't not participate. They don't have a choice at this point. They're getting the token. It goes in the same wallet that they have that they're getting sparking. So they, when they tell you, oh, we're not participating, okay, customer service might have said that, or even the Twitter account might have said that. But at some point, they're going to realize they have the token now, and now all their users are emailing them, tweeting them, saying, release your Songbird to us. Then they're going to budge. So just be patient with that. And also, Songbird's probably going to come out at a very low value. So if it's like, say, hypothetically, a penny, and you had 50,000 XRP on 12/12/20, that's $75. So, I don't think Songbird's really going to be something like, if they didn't release it to you, I don't think you're going to lose a tremendous amount of money. Spark, on the other hand, that's different. Patty and I think that's going to be worth a lot more when it launches compared to, say, Songbird. But I'm just speculating there. That's speculation with the price. But just keep that in mind, that they're getting the token no matter what. If they want to participate or don't want to participate, they're getting it.
Also, yeah, just remember, like, who are the people that are answering customer service emails and who are operating the Twitter? They're probably people far away from where those decisions are made. So, while they're getting them, maybe over the course of 6 weeks, they end up getting so many dang emails about Songbird that they kind of have like reporting metrics. So, like, all right, if we get asked about a certain thing so many times, we bring it up to somebody that's higher up. So, I mean, like, those are ways that businesses work to get things brought to the attention of the people that would ultimately make that decision. So I mean, I would just say, like, doing it in a respectful way and laying out the facts is the best way to email them. And we'll just keep going with it, and hopefully as many exchanges as possible are going to be releasing Songbird.
Yeah, that doesn't mean they're necessarily going to support trading, though. Like, they could support trading of Spark, and most of them are going to support trading of Spark. If they're participating in the airdrop, there's probably going to be a Spark listing on there, and they're probably going to be a signal provider, many of the big ones. Because Hugo has said there's almost 100 signal providers, and we only know of like 20 or 25 in the community. So where are all the rest coming from? Obviously, the exchanges are ideal signal providers. They probably have most of the price feeds to the assets that are on the FTSO anyway. So for them, it's not that much work, and they could make money, and their users could make money, because they'll basically say, oh, just take your Spark with us and we'll pay you X yield. And that's going to happen on a lot of exchanges. And it's one of the reasons why so many exchanges supported Spark. Like, I hear some of these YouTubers, like, I like the AI, but he's like, couldn't comprehend why so many exchanges supported Spark. Well, here's your answer, because they could make money, and it's an easy business model for them, and it doesn't cost them a lot to build the infrastructure. So literally just send their API of their price feeds or WebSocket to the FTSO and, earn yield on their customer Spark, and then just pay them out. So they're providing a service for their customers. They're going to take a cut, and for example, like Coinbase does that with Algo, but it's the only one. But Kraken does a lot of staking. I mean, they're really involved in that. So I'm sure Kraken will be one of the ones that will probably offer as a signal provider. I'm not sure if all of them will. I can see Bitrue, hopefully Bitstamp, but you don't necessarily want to use those services. I mean, I would delegate directly from your Bifrost or Decent or whatever wallet you choose. That's best for delegating the FTSO vote, because you're going to earn more rewards, and you get to choose between 3 different signal providers, and maybe that exchange isn't the most accurate versus one of the signal providers who is more accurate. So
yeah, I mean, I would keep in mind any centralized institutions, at least in the beginning stages with Flare, because you're going to be able to get the most yield, and I doubt that they would give you your fair cut for it, especially when you don't have the visibility. Maybe so, yeah, maybe Celsius,
like,
yeah.
We're going to start seeing, just so everyone knows here, the DeFi trend that we're going to start seeing in the future here is that CeFi and the exchanges and even institutions and even things like PolySign, Center Custody, and hedge funds and crypto custodians are going to start integrating into the DeFi protocols themselves. And then they're going to build their own front ends, their own services, and offer them to their users, KYC them, AML, and then they'll tap into all the yield and the DeFi. And that's the next phase that will explode DeFi. Right now, it's very clunky to use on Ethereum. It's very difficult. It's a whole new complex experience, and you got to do it basically by yourself. Now, as we get better and better with this, there'll be better wallets made, there'll be better tools, and we'll continue probably keep doing this. But for the everyday masses, They just want to come in and they could say, oh, wow, I could earn 10% yield by putting my XRP here. Oh, sure, I'll do that. And then that service or that CeFi platform is minting it into FXRP, using it in this liquidity pool, using it here, and aggregating all that and earning 25%, but they're paying the user 10. So that's where I think I see the whole DeFi space evolving into, and it can be regulated on the endpoints. You're not going to be able to regulate the software in the middle.
You still there, Mickey? Cut out for
Yeah,
a
I'm
sec.
still here.
Okay. I was gonna say before
I
we
was rambling a while. I was like, all right, I'm done.
Yeah, well, we're getting close to the end, but I wanted to give you a minute to touch on Tom Emmer, the Tom Emmer interview
I
with
love that
Tony.
guy.
Yeah, nah, he was
Man,
that was the best one I've seen with him.
If you haven't watched that interview, he doesn't say anything like,
he called out the Fed. I was pretty shocked.
He called out the Fed and he said, Gary Gensler, I'm very disappointed with you multiple times. And he's got the right idea. I mean, he understands that, this regulation by enforcement, and it's not even regulation by enforcement anymore. After the Poloniex enforcement, they didn't even provide any type of clarity. They didn't even name the damn assets that were securities. So how do you enforce something for securities law in violation? We don't name what the securities are that they were, supposedly selling. So Tom Emmer basically said that this case is going to have broad implications on the whole industry once it's settled. And that's something, we just have to keep in mind here. Regardless of what Congress and legislation doesn't look like that's moving anytime soon. This case will probably have a bigger impact on everything. And if Ripple wins, hands down, like doesn't settle, but wins at summary judgment, it basically is going to tie the hands of the SEC. And if anyone has seen the CFTC, who has a whole tech lab, very knowledgeable on DLT, knows about DeFi, came out and said the SEC has no business regulating exchanges of commodities, which basically crypto assets, they say, fall more into than securities. And if they've already admitted that securities, that assets, even if they're offered as an investment contract, could turn into non-securities, well, what the hell do they have to do with regulating exchanges? We don't need a cop on the beat, and it definitely shouldn't be Gary Gensler. So Tom Emmer really made that clear. So there's definitely a battle going on. You got the CFTC coming out publicly with the guy, Brian Quintez, I forgot his name.
Yeah,
Quintez, who's a commissioner. You got Hester Pierce. Then you got Giancarlo saying the same thing on Twitter. And now you got Tom Emmer. So there's obviously, some dissension upon who's really going to be the one regulating crypto. And it looks like the SEC, and Tom Emmer says that they're basically going for a power grab to try to regulate an industry they have no business regulating. They're there for raising capital and trading securities. Cryptos are not securities. I don't care whatever that stupid infrastructure bill people posted on Twitter. It doesn't matter. The rest of the world, they're not securities. So security is something somebody sells somebody. You have stock rights to it, voting rights. It's a stock in a company. Okay, it can be sold as an investment contract, but the actual assets, these are decentralized public blockchains. Anyone can use these assets. Yeah, it's like ridiculous, he said.
Yeah, and you know how like people kind of, I hear like data, referred to as like the oil of the 21st century, basically. And what is oil? Oil is a commodity. Data is a commodity. Data is not a security. And what ultimately are cryptocurrencies? It's just a bunch of data. So it's just something entirely new, and we'll see. Like that infrastructure bill, if it passes as is, won't even go into law until 2023. There's still tons of time to have that thing fixed and changed and all that kind of stuff. It gives me hope when I see somebody like Andrew Yang's out there like talking well for crypto, and then on the other side of the coin you got Ted Cruz, who's also doing the same, and they're basically like diametrically opposed when it comes to like politics in general. But you can see that there are people in Congress that are crossing party lines. We'll have to see how it evolves, but I don't think we're in a terrible situation yet or anything like that.
No,
there's still a lot of game to be played, basically.
And this is not political. And he made it clear that there's nothing political about Republican, Democrat about this. That's really not a non-factor. And he even said that too. You know, there's plenty of Republicans that oppose and plenty of Democrats that oppose and plenty of Republicans that support, Democrats that support.
I mean,
so it's not a...
It's more class. I mean, it's establishment versus not establishment groups, basically.
And then we got the Treasury Department. There is some influence, he said, from the Treasury Department.
Well, yeah, Janet Yellen's establishment as it gets.
Well, also Mnuchin, well, you know, the last Treasury Department administration was trying to do the same thing.
Oh, well, he is too. Yeah. No, that's the thing is, you know, when people look at politics as like a left and right, to me, it's more of like a class thing or a status quo versus, you know, progressing basically. And people on both sides of the aisle fall into the establishment group. And those are the people that are generally pushing back on cryptos at this point that I can tell.
But luckily, we're in a position right now, we don't have to deal with Congress or deal with the executive branch. It's in the judicial branch. Yeah. This is what, you know, U.S. was set up. Checks and balances, the three parts of government. The judicial branch is to handle this. Regardless of what the SEC says anymore, it's irrelevant now. It's what the courts say. Gensler could come out and say everything's a security. It doesn't matter. You know, he's trying to take just like Tom Emmer said, take this Howey test and apply it broadly to everything. Just because he thinks everything's securities doesn't mean that's, oh, SEC said that, that's it. No, because the rest of the world doesn't. And it's going to get slammed down the US's throat. That's really what's going to come down to. Once it hits the third world, and once regulated entities are going to be able to get in, even in other countries, once they could set up like those, like I said, CeFi platforms, crypto banks, neobanks, digital banks, exchanges, and they could tap into actual like DeFi trading and actually on-chain applications, that's the next generation financial system. It's not coming from the BIS and the CBDCs, you know, that's just years away. You know, that's why I don't even focus on that anymore. I mean, it's something to, you know, pay attention to. Ripple's obviously involved in it. If, you know, if Ripple announces a pilot with the Central Bank of France and the EU, yeah, that's probably going to blow up the XRP price. But is it going to be used right away? I don't know. There's a lot of competition going on there. And I think there's years of pilot testing going on. So first and foremost, what's happening in front of us? DeFi is exploding. So this is where we should be kind of focusing. This is where the money's to be made. This is the new innovation. This is not getting stopped by regulation because it can't be. It just keeps developing and developing and developing and developing. So that's why we focus and we call the website DeFi Standard, because we see this is the future. And it's just going to keep growing. So we're going to continue to cover this. I'm not going to cover conspiracy CBDCs and things like that and crazy price jumps. So
cool. Well, I think that's a good wrap. Oh, you want to add some more? Just
that we might cover here and there. There are other projects that we have seen, like Dot I came across we really like. There's some others that are coming out, like Patty made it on Panther Protocol. And there's another one that's coming out, I don't want to say yet, but that I really think is just, the technology is just revolutionary and can have a big impact on just the whole industry in general. So it is always good to keep an eye outside the XRP Flare echo chamber.
Polysign related?
I mean, you know what? It's like the retail version.
It is. No, I know. Yeah.
Yeah. I'll just give a hint. It's
I wanted to throw that in there. Yeah.
The wallets are going to completely get revolutionized. I mean, soon you're going to throw out your hardware wallets won't be necessary anymore. They won't be part of keys.
MPC for retail.
Yeah, MPC for retail. That's really what it is. I mean, it's breakthroughs in cryptography and technology that are taking place now in the private sector. You know, they'll start on like the institutional custody, Polysign stuff, and then they're going to make their way down to retail. You know, and this is what Ripple's doing. They're saying, what do they keep hammering? Tokenization, wallets, and identity. Those are the things, you know, that I think are most impactful. And once you could add kind of those into the mix with DeFi, it's like kaboom. You know, that's where the financial system then blows up. And, you know, the US just will have to just, you know, get on board. You know, who knows what happens with stock markets and monetary system. You know, I can't predict that. But we just know the innovations taking place here in DeFi. And the tokens, the 99% going away thing, I can't believe people still say that. Like, it's just mind-boggling to me. I'm just like, somebody just said that again on Twitter.
Well, they keep saying like, Brad Garlinghouse was right. And I'm like, not everybody at Ripple is right all the time.
Let's go look on Twitter. Let's go look on Coin Paprika or CoinGecko. How many coins are there? Yeah. And just look at on the DApp tokens. Like, those are exploding. It's not...
How many airdrop tokens are coming to XRP holders in the next year, potentially?
Like, give me a break. Yeah. Like, and I can't believe people still hold on to that. He was wrong. Brad Garlinghouse. I'm sorry, but he was. You know, they didn't foresee certain things like ICOs. Like, okay, how can you issue a token if you can't ICO? It looked like, oh, wow, now screwed. Now all of a sudden we have DAO token offerings, yield farming, liquidity mining issuances, airdrops, and they're going to keep coming. And now we're starting to see layer 2, and then these distributed applications that will go over multiple networks, not just one network. They'll be over both. Like Aave soon will be over all different networks. Will probably be over Flare at some point too. So some of the big DeFi protocols will grab institutional adoption first. But yeah. And yeah, the travel rule. That's, I think, the biggest thing. That could definitely take the market on a hit there, shock it for
yeah, that's why I don't think we're straight up in, roses and rainbows from here on out. There's a lot of things that could still come down the pike to knock the market back a little bit before I think we get back to roaring. So
that's why I think
it's nice
DeFi,
to see a little green.
But that's what's going to be nice with Flare and DeFi. It's like, even if the market's not going straight up, if it's going down sideways, you're still earning yield and you're stacking assets without having to pull fiat out of your pocket or your paycheck. And I think that's going to have a big effect. It's on Ethereum now and it's hard to use, it's expensive. But now in the next cycle, when these DeFi products are all readily and accessibly available to everybody from their self-custody wallets or from their CeFi platforms, it's going to affect how the bear markets and the cycles, play out. They're not going to be the same because now people are going to be earning. If the market's going sideways, we're going to have locking up of more assets, and we're going to have more people generating yield who are going to stay in the market. They're not going to sell out to stablecoins or sell out to fiat and then get out. They're going to just stay in the system, and more people will come in. So I think the cycles eventually of that whole 2-year bear market shit is going to just end soon. So
cool. Well, I think this is a good point to wrap it, Mickey. We're at an hour. So
yep.
Pleasure having you guys with us today. Hope everybody enjoys the rest of the week. This is the DeFi Standard. I'm Patty XRP, and that was...
I'm Mickey B. Fresh.
Nice. And we are out. See y'all.